Inflation is one of the most significant threats to wealth. As the value of money decreases over time, the purchasing power of assets erodes, potentially causing financial losses. However, billionaires often have strategies in place to protect their wealth from the impact of inflation. Here's a closer look at how the ultra-wealthy shield their assets from inflationary pressures. 1. Diversification across asset classes. One of the key strategies employed by billionaires to protect their wealth is diversification. By spreading their investments across a wide range of asset classes, including stocks, bonds, real estate, commodities, and private equity, they reduce the risk of any single asset class losing value due to inflation. This helps maintain the overall value of their portfolio, as different assets tend to perform differently during inflationary periods. For instance, while bonds may lose value during inflation, real estate or stocks may appreciate. 2. Investing in real estate. Real estate is a favorite hedge against inflation for billionaires. The value of real estate tends to rise with inflation, making it an effective store of value. Rental income can also keep pace with inflation as landlords can increase rent to reflect rising prices. Furthermore, real estate often provides a tangible asset that can be held for the long term, offering stability and a hedge against volatility in financial markets. 3. Allocating wealth to precious metals. Precious metals like gold and silver have historically been seen as safe haven assets during times of inflation. Gold, in particular, is viewed as a store of value because it typically holds its purchasing power when paper currencies lose value. Billionaires often allocate a portion of their portfolios to gold or other precious metals, especially during periods of rising inflation or economic uncertainty, as they offer a form of wealth protection that is not directly tied to fiat currencies. 4. Investing in inflation-protected securities. Inflation-protected securities, such as Treasury inflation-protected securities, TIPS, in the U.S., are government-issued bonds specifically designed to protect against inflation. The principal value of these bonds increases with inflation, and they also provide regular interest payments. Billionaires often invest in these securities because they offer a low-risk investment that keeps pace with inflation, providing a stable return over time. 5. Holding assets in foreign currencies. To protect against inflation in their home country, billionaires often hold a portion of their wealth in foreign currencies. This strategy can be especially effective if inflation in their home country is rising faster than in other economies. By holding assets in stronger or more stable currencies, they reduce the risk of their wealth being devalued by domestic inflation. Wealthy individuals often use foreign bank accounts or international investments to access a more diversified pool of currencies. 6. Investing in commodities. Commodities, such as oil, agricultural products, and natural resources, often appreciate in value during periods of inflation. As demand for goods rises and costs increase, the prices of commodities tend to follow suit. Billionaires often allocate a portion of their portfolios to commodities, benefiting from price increases that keep pace with inflation. 7. Owning businesses with pricing power. Billionaires often own or invest in businesses that have pricing power, the ability to raise prices without losing customers. These businesses are typically in industries where demand is inelastic, such as healthcare, technology, and luxury goods. With the ability to increase prices in response to rising costs, these companies can protect their profits and maintain their value during inflationary periods. By holding equity in these businesses, billionaires shield their wealth from inflation's negative effects. 8. Private equity and venture capital. Investing in private equity and venture capital allows billionaires to access growth opportunities in private companies that are not as affected by inflation as public stocks. These investments often have the potential for significant growth, and many private companies can adjust their business models or pricing strategies to adapt to inflation. In this way, billionaires can preserve and even grow their wealth by holding equity stakes in businesses with long-term growth potential. 9. Utilizing tax strategies and wealth protection structures. Billionaires are also skilled at using tax strategies to protect their wealth. These strategies often involve creating trusts, offshore accounts, or family foundations that shield assets from high taxation or inflation-related losses. By working with financial advisors, Billionaires can structure their wealth in a way that minimizes the impact of inflation and taxes on their assets, keeping more of their wealth intact. 10. Digital assets and cryptocurrencies. In recent years, cryptocurrencies such as Bitcoin have become popular among billionaires as a hedge against inflation. Cryptocurrencies are decentralized and not directly tied to traditional financial systems, making them an appealing alternative to fiat currencies. Although highly volatile, some billionaires view cryptocurrencies as a way to diversify their portfolios and potentially gain from inflation-driven price increases. Billionaires have a wide array of tools and strategies at their disposal to protect their wealth from inflation. Through diversification, real estate investments, and inflation-protected securities, they safeguard their assets from the eroding effects of inflation. Additionally, they leverage the power of commodities, private equity, and cryptocurrencies to maintain and grow their wealth in uncertain economic times. By using these strategies, the ultra-wealthy can ensure their financial security even when inflation threatens to reduce the value of money.